I want to have a quick conversation with you about payment processing fees. And the big question is, are those fees tax deductible this year? So here are the facts I want you to pay attention to. The thing is that when you think about credit card processing fees, you have a lot of cash depending upon the kind of transaction volume you are talking about. Okay, the thing is that those fees could be tax deductible or not tax deductible depending on how you set things up from the get-go. So I want to really explain to you how to really make sure that you are actually getting the right procedures in place, not only in the short run but also in the long run. Because see, the last thing you want is that at the end of the year, and you are ready to do your taxes, to file your 1040, your 1120S, your 1120, or your 1065, and you realize that basically you haven't actually put in place a strong foundation when it comes to accounting for your payment processing fees, so that you can really deduct them. You can write them off on your tax returns. So by following the guidelines I will be sharing with you in today's conversation, and also, by the way, seeking the advice of a tax professional, your business can ensure that you are getting the most out of your tax benefits, especially when it comes to credit card processing fees. So let me answer the big question, the $1 million question. Are payment processing fees tax deductible? The thing is that as a business owner, you know for sure, whether you have an online store or a brick and mortar store, you know that credit card processing can come with a cost, credit card processing fees. Now, these fees can add up quickly and become a notable expense. The good news is that in both Canada and the United States, many of these fees are tax deductible. So that's the big answer I want to really, that's the big takeaway I want you to really have here. Okay. Now, in Canada, payment processing fees fall under the management and administration fee section, while in the US, they are considered ordinary and necessary business expenses. And that makes sense. I mean, ordinary and necessary because you cannot avoid those fees anyway. So, and they are also ordinary in the sense that if you accept credit cards payments and debit card payments, you are going to actually have these fees, these inherent fees, not only in the short run but also in the long run. So that's the good news. Good news that those fees are tax deductible, but you got to have a certain foundation, operationally speaking, to actually write those fees off. So let me talk to you about Canada versus US here. So which business expenses are eligible for deductions in Canada? I want to first talk about Canada and then I'll speak about the US. So if you're wondering what is considered a business expense, in Canada, businesses are eligible for tax deductions on expenses incurred to earn business income. The rules can be blurry, especially when you look at which office items are considered expenses, such as pens, pencils, stamps, and paper clips, versus capital items not deductible, such as chairs, calculators, desks, and filing cabinets. So I'm actually, let me show you on the screen here a compiled list of deductible expense for businesses in Canada, published by the CRA, the Canadian Revenue Agency. Okay. So note that payment processing fees are a deductible business expense under the management and administration fee section. The CRA, and that's the good news, also provides this handy bit of advice if you find yourself wondering whether an expense is deductible as a business expense. As a general rule, you can deduct any reasonable current expense you incur to earn income. The deductible expenses incur any GST, HST, like sales tax you incur on these expenses minus the amount of any input tax credit claim. As a general rule, you can actually deduct any reasonable current expense you incur to earn income. So that's pretty good. So when I speak about Canadian Revenue Agency, the CRA, the jury is still out on why we wouldn't need desks and chairs to earn income under this definition, but we know that payment processing fees are deductible. However, to be eligible for a tax deduction, and this is an important element, an expense must meet the following criteria. It must be incurred to earn business income. It must be reasonable in amount, and it must be supported by documentation. It's also important to know that some fees may not be deductible if they are considered capital expenses, filing cabinets and chairs, or incurred for personal use, your kid's birthday present. Regardless, keeping detailed records of your credit card processing fees and purchases you plan to expense is actually a good practice. So this is important. Now, the Business Development Bank of Canada cites advice from the CRA Liaison Service, emphasizing the importance of retaining and submitting regular invoices and receipts. And practicing administrative hygiene is also key to running your business smoothly and streamlining tax season. And you want to streamline tax season. Okay. So if you are still keeping a plastic folder of all your invoices and receipts, this year might be the time to switch to a client relationship management tool that automatically synchronizes your payments, receipts, invoices, inventory, and customer information actually all in one place. Retire the spreadsheets and keep synchronized records along with useful sales and customer data insights. Now, I want to talk to you about tax deductibility or credit card processing fees in the U.S. Now, in the U.S., businesses are also eligible for tax deductions on credit card processing fees. The IRS allows deductions for expenses considered, I think I said this before, but ordinary and necessary. Ordinary and necessary in conducting your business, okay? So that's important, ordinary and necessary. Remember that duality. So an expense is considered ordinary if it's common and accepted in your industry. In other words, you're not the only one claiming that expense. It's an expense that your rivals are also claiming, and experts have agreed that this expense is actually important for any player to actually operate successfully in your industry. So that's really what the IRS looks for when it evaluates whether or not an expense is ordinary in your industry. Now, an expense is deemed necessary if it is helpful and appropriate for your business. Let me repeat that. An expense in the eyes of the IRS is deemed necessary if it is helpful and appropriate for your business. So basically, credit card processing fees meet both of these criteria, because if you accept credit card and debit cards, basically you are going to need a certain set of protocols, security protocols to run your business and accept payments. And so those fees are considered ordinary because most businesses accept credit cards as payment, and they are necessary because credit card payments have become a familiar and expected payment method for customers. Okay, I mean, if you have a business and you don't accept credit cards and debit cards, you are really losing big time, because the customers are just going to go to your rivals, because your customers want to have ease of use, and so providing payment capability is part of what's called CX, your customer experience. Your CX is really critical if you want to bolster your revenue over time. So when you think about the IRS, okay, what fees are deductible this year? In other words, when you file your 1040, when you file your 1120S, when you file your 1120, or when you file your 1065, what fees can you actually deduct on your tax returns? No problem. I mean, of course, again, everything I'm saying here, you need to have records to back up the amounts and also the nature of the fees that you are writing off. So simply actually filing your tax returns and writing off certain fees without substantiating those fees could really land you in a big regulatory trouble with the IRS. Okay, so you always want to have the evidence that supports your tax the expenses you are writing off. So examples of credit card processing fees that are tax deductible in the U.S. this year include monthly statement fees. That's really important. So like the $20 or $30 that they're charging you, the merchant processor is charging you every month, you can write it off, not a problem. Then you also have transaction fees. So transaction fees are also like you can write them off. Okay. You have also interchange fees. So interchange fees are also deductible. You have merchant account fees. You have setup fees, and you have chargeback fees. Now, chargeback fees are not entirely your fault. In other words, if a client is actually, if a customer actually later on says that, I never authorized this card in the first place, or I never authorized this transaction in the first place. Basically, you are incurring fees from the merchant processor. Okay. But the good thing is those fees, you can actually write them off because they are ordinary and they are necessary. So this is important. Now, one thing I want to say here is that most fees and costs charged by a payment processor will be tax deductible. However, other ways exist to reduce or eliminate extra and hidden fees. So this is one of those things where you want to make sure that you are putting in place the right controls and processes to avoid actually falling prey to non-transparent pricing practices, especially if you are dealing with a payment processor that has dodgy, let's say that's known for dodgy practices, which like a payment processor whose reputation is not really clean. Okay. So let me give you the taxes here. How do you ensure that credit card processing fees are tax deductible? Like I said, simply having the fees is not really going to make you actually win if the IRS were to audit your company. You want to make sure that those fees are presented in a way that they can be deemed tax deductible. So keeping accurate records and documentation of all fees paid is actually essential to ensure your credit card processing fees are tax deductible. Okay, it's one of those things where you got to have those two elements. You got to have the accurate records. That's pretty easy. You just have to make sure that you have a folder where every month when you receive your payment processing statement, you are able to file that in a specific folder. And normally, if you have the right accounting software, the accounting software should be able to pick that up real fast. And also, if you have if your payment processor has a solution, let's say a virtual terminal that integrates with your accounting software, then you can actually account for fees really seamlessly. Like in other words, you don't have to do things manually. The accounting software will pick up those expenses directly from the payment processor's tool. Okay, so if you have QuickBooks offers that flexibility. You also have a Wave. You have Zero also. You also have FreshBooks helping you also seamlessly account for credit card processing fees. So just make sure that you keep accurate records. If for any reasons you do not have the ability to do things electronically, then keep accurate records, accurate physical records. And also make sure that you are able to document all fees, okay? So when I speak about accurate records and documentations, I'm speaking here about monthly statements from your credit card processor. So that's actually the data that constitutes the original source of information. Monthly statements from your credit card processor, invoices and receipts for fees paid, for instance. This is also an important element to think about. And also bank statements showing fees that are paid. That way you have a clear idea what's working and what's not working. So in addition to proper documentation, you also want to consult with a tax professional, a CPA or an EA, to ensure that you are correctly claiming your deductions and taking advantage of all available tax benefits. That's really important. So how do you reduce your credit card processing fees? Because the whole thing is that simply because those fees are deductible doesn't mean that you can just go ahead and just accept outrageously high fees, okay? Because those fees are still part of, they're still a minus to your cash inflows. They are still an expense. So although processing fees are accepted as a cost of doing business, it doesn't mean you need to buy the price. Actually, the price your payment processor may be charging you without a second look. So how can you find lower rates? And how do you know what you are paying? Now, start by learning about the credit card transaction process and what credit card processing fees are going, to what fees those are going to. Typically, fees are made up of three components. You have the interchange fee, the cost of the transaction, and your payment processor's margin. First thing first, you want to understand your pricing model and ask about special rates. It's one of those things where you want to engage in a continual conversation with your payment processor, where you have someone on the phone explain to you how the pricing model works. That's important. So depending on the pricing model your provider offers, you may be getting the wholesale rates with a small margin in the case of interchange plus pricing, or paying one flat rate regardless of the actual cost in the case of a flat rate pricing. So interchange plus pricing versus flat rate pricing. See whatever works for you. If you have an interchange plus provider, ask about volume-based discounts or interchange rates for your specific industry. For example, registered charities and nonprofit organizations often qualify for lower rates, but you got to ask. If you don't ask, they may not give it to you like automatically. Next, you want to cut extra and hidden fees. So not all fees are legitimate. Take a look at your monthly processing statements. Tally up all your extra, additional, or other charges, as well as sneaky charges like administrative fees, PCI compliance fees, batch settlement fees, and more. Okay. Once you completely understand how much you are paying, consider leaving your merchant contract for a better payment provider. Ensure that you don't get settled with an early termination fee for canceling your service or equipment contract. Because sometimes, again, going back to what I said about the sneaky processing practices, some payment processors may actually settle you with heavy fees at the end of the contract because they want to keep you as a customer. I mean, because when you leave, you are actually cutting them off of revenue. So the bottom line here is that when you think about payment processing fees, they are tax deductible. You got to be tax season ready, right? It's one of those things where you got to have the right foundation, the right protocols, the right controls and processes to help you actually be tax season ready. And this goes beyond actually having the right CPA or the right EA or the right bookkeeper or even having the right software, the accounting software or the billing software. It's about a set of let's say it's a set of company values. Okay, credit card processing fees can be a significant expense for your business. However, now you can look forward to a tax season knowing that many of these fees are tax deductible in both Canada and the US. And so by keeping accurate records and consulting with a tax professional, you can ensure that you are properly claiming your deductions and also maximizing your tax benefits. It's one of those things where it's not just about the industry you're in. Okay, it's about having the right sort of support from a professional who can really give you the answers that you need for your specific industry. Because as I said, credit card processing fees are deductible from A to Z across the board. However, your specific industry might have a different set of rules or a different set of realities that only you and or a professional accountant can really help you navigate. The bottom line here is that you want to reduce your tax burden by actually writing off expenses that you are paying anyway. You are paying anyway to a payment provider, okay? And you want to make sure that you don't get double dipping, paying once to the payment processor and then paying second time again to the IRS. If the law allows you to illegally write off those fees, you might as well take advantage of them big time. So, in closing remarks into this conversation, I spoke to you about the payment processing fees being tax deductible in the US and Canada. And I give you the facts. I give you the compare and contrast between the two countries, the deductible fees, the taxes, and now the closing remarks. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.